Welcome back. Now we are discussing about two accountant story. Okay, so we'll continue the discussion on bank reconciliation statement. Okay, so I'm explaining this through a story. What is a story? It's a story between two accountants. Okay, for the sake of this story, we took the same company accountant and the commercial bank accountant. Between these two accountants, we build up this story. Okay, the first chapter is concluded. Okay, so if you want to watch the first chapter, the link is given above, so you can go and check the first chapter. Okay, now this is the second chapter about these two accountants. Okay, let's begin with, it continues from Sam company accountant. Okay, now let's assume Sam company has done two credit transactions. One is relating to sales, the other one is relating to purchases. Credit sales and credit purchases. We'll begin the story with those two transactions. Okay, now let's assume he has done a credit sales worth $600. If it is a credit sales $600, what is the double entry?
Sales account to credit, cash account to debit.
Credit sales.
Credit sales. Sales account to credit.
Where do you debit?
In the
Debtors.
debtors account.
Yeah.
Yes.
Okay. We can say debtors account or customers. Okay. So let's assume it's $600. So debtors debit. Okay. Let's assume this was taken. This took place on 10th January. The transaction took place on 10th January. Doesn't matter. It's okay. Okay. So this is debtors. This is sales. Okay, so first transaction, this is credit transaction, credit sales account, credit, debit, debtors account. There is another transaction. Okay, what is that? Credit purchases of $300. So how do you record that?
Supplier
Or creditors,
you credit and purchases you debit.
Yeah. So creditors you credit, purchasers account will be debited 300. Let's say this was on 11th January and this is purchase. Sorry, I am recording it. It's not correct. Okay, 11th January purchasers and this is creditors. Is that clear? Okay. Now, those credit transactions are recorded separately. Okay. Now, the debtor, our customer, has settled this $600 by giving us a check. He gave us a check. He paid off his outstanding balance by a check, through a check. So, the moment the same company accountant receives the check from your debtor, his debtor, what he will do? What he has to do?
He has to go to the bank.
No, prior to that, we are not talking about this story yet. First of all, you have to complete this story. Okay? So, he receives check. The same company accountant, what he does, what he has to do? Record the transaction. How we will record the transaction? By crediting debtors account. Okay, let's say this was received on 31st January, end of the month. Okay, he receives the check. Then same company accountant, what he will do? Debit the bank column. Okay, 31st January, debtors 600. Okay, then this will be settled. Balance is 0 now. You receive the check. As an accountant, what you have to do, you received a check. Okay, by keeping the check with you, okay, will you get the cash? No, it has to be deposited in our bank. Okay, so therefore he has to go to the bank, he has to send somebody to deposit the check. Okay, the moment the bank receives this check, please remember, now the bank is receiving a check issued by a customer. Okay, so he comes and he deposits. So the commercial bank accountant story begins now. What he will do now? What he has to do now?
He has to record and give the money to Sam's company's account.
Okay, so he comes and he deposits. Okay, the moment when this check was received, 31st January. Okay, so he comes.
What he will present? He will present the money or no, not deposit.
No, he is depositing. No, because he receives the check.
He's putting it into the bank.
Putting it into the bank.
I thought it was the other way around. He's taking the money.
No, he's depositing. Okay.
Okay.
He is depositing the check. Okay. The moment the commercial bank accountant receives the check from Sam company, which was received from a customer. Okay. Let's say this customer's account was maintained in a different account, different bank account. Okay. This customer's bank account, let's say Citibank, for example. Okay, his accounts are maintained in Citibank. There are a number of banks, no? If you want to open a bank account, you can go to a number of banks and you can open it. So this customer's bank account is Citibank. Okay, so he is paying his outstanding balance. Okay, so therefore he has issued a check from his bank, Citibank. Okay, now we received the Citibank check and we are going to our commercial bank and we are depositing it, some other bank's check, and which was received on 31st January. Okay, so when he receives the check, unlike depositing cash, he will not immediately debit and credit the accounts. He will not do that because it's a check. Okay, if it is a cash, what he will do? Immediately he will debit the cash and he will credit the Sam company account, and he will increase the liability towards Sam company if he receives cash.
Tati, so if a Citibank now, okay, so the money is transferred to commercial bank?
Exactly. Okay, now the commercial bank accountant has a responsibility to check with Citibank whether the customer, this particular customer, has sufficient funds, enough funds. You understand? So he has to check with Citibank. So this process will take 1 or 2 days. You understand? There is a timing difference. Okay? So though you received on 31st January, so 31st January you go and deposit. So the accountant will go and deposit. Sam company accountant will go and deposit. But commercial bank accountant, he has to check with Citibank and he has to clear the check. This process will take at least 1 or 2 days. So we will say 2 days for the sake of this example. Okay, so 2 days means when this check will get realized means when the commercial bank accountant will get the clearance from Citibank after 2 days. So which means 31st January, 1st February, 2nd February. Okay, so let's assume 2nd February he will get the clearance. Is that clear? So that means he will not immediately record this transaction. Okay? So he has to wait until 2nd February. Is that clear? Because it takes time.
Tati, you don't balance these accounts?
We have to balance at the end of every month. That's what I am going to come. Let me explain you this. Okay, don't get confused. Okay, so still we are in the month of January. Okay, at the end of the month January, both the bank as well as SAM company will have to close their books. That's what I am going to explain this process. Okay, even though 31st January he deposits the check. Okay, it will not be recorded in the month of January. This is what I am explaining you. Why? A commercial bank has to clear the check received by SAM company from a different bank, Citibank. Okay, so that clearing process, okay, will take at least 1 or 2 days. Okay, so let's assume it takes 2 days. Then the bank has to wait till 2nd February to record the transaction. So it will not be recorded in the month of January. Is that clear? Okay, though the accountant of SAM company records this particular transaction in the month of January, will it be recorded in bank's account? No, because there's a clearance process. There's a timing difference. 31st January deposited, but it will get cleared, get realized on 2nd February. Is that clear, that concept? Okay. Now we'll come to this SAM company again. The story begins again. SAM company settles the creditor on 31st January. Okay, so 31st January he settles the creditor or the supplier by paying off, by issuing a check. Okay, so the moment he issues the check, his balance reduces. It's a book entry. He has to record the entry here, and he has to debit the bank creditor's account 31st January. So thereby the balance will be 0. Okay. Now we have issued a check. Where our account is maintained? In the commercial bank on 31st January. So he has to, the creditor has to go and present the check, no? The creditor has to go to the bank and he has to present the check, isn't it? To get the money. If he presents the check, what the bank will do? They will credit the cash and they will debit SAM account, our company account, because they are releasing the liability. Okay, let's assume he did not go on 31st January. Usually, practically it will happen, no? Let's say you received 31st, let's say in the evening. Even if you go to the bank will be closed. Okay, then you will have to go to the bank on the following day. Okay, so let's assume he went to the bank on 1st February. Instead of going on 31st December to encash his check, he went to the bank on 1st February. Okay, then will the commercial bank accountant record this transaction in the month of January? No, it will not be recorded. This is for example purpose I am explaining this story. Clear? Okay. What has happened? Let's recap. There was a customer, he paid 600 by way of check. Okay, from his bank, Citibank. The SAM company accountant received the check, he recorded and he went and immediately deposited, but it will not get realized because there is a clearance process. Okay, the commercial bank accountant has to check with the Citibank whether the customer has cash. Okay, first of all you have to get the clearance from the Citibank, so it takes 2 days for this example. So therefore this particular transaction will not be recorded in the month of January. Clear? Okay. Second transaction, he issued a check to creditor. Creditor supposed to go and encash it on 31st January, but he did not go to the bank and he did not present the check. He went to the bank on 1st February. Will this check get presented? Will this check be deducted from our bank account?
In January?
January, in the month of January? No. Is that clear? Okay, now I explain you the other concept as well. Okay, now at the end of 31st January, at the end of the month, 31st January, we have to close the books. Okay, so when you close the books, what will happen? Bank will send us a bank statement. They will send us a bank statement. So the accountant of SAM company, what he has to do? He has to compare, cross-check. He has to compare the bank statement with the cash book. So that process we discuss in the chapter, first chapter of the story, which is the reconciliation. Okay, he has to do the reconciliation to identify the differences. You understand? Okay. Now let's assume you receive the bank statement. Okay. Before that, now we are at the end of the month. Is that clear? Okay, 31st January. What happens? The SAM company will balance this off. How do you balance this off? That also we discuss. If you want to see how to balance this accounts, there's a link above, you can go and check the link. Okay, check that video. Okay, first of all you take the highest total, 5,000. The cash balance is how much? Balance carried forward. Okay, so balance carried forward is how much? 2,000. That is a cash. Then you had 3,600. 3,600. How much is the balance now? 2,800. 2,800. Okay. Our cash book, the bank column balance is 2,800. Okay. Now we are receiving the bank statement. Okay. So this is the bank statement. You know the format. Okay. So we have 3 columns: debit, credit and the balance. And this is the description column, this is the date column. Okay, this is the bank statement as at 31st January 2020, SAM company. You are receiving it. So what are the transactions recorded in the SAM company? Which was 5th January, there was a deposit. Okay, how much? 3,000. Balance was 3,000. On 10th January, there was a check issued to a supplier. Okay, check 1, 2, 3, 4, 5, 6, check number 500. And what is the balance here? Afterwards, in the month of January, are there any transactions? No. I explained you why. Even though we recorded in the cash book, the bank has not recorded. Okay. Now we have received this bank statement. What you have to do? The SAM company accountant, what he has to do? He has to compare this with the bank column of the cash book. Okay. First of all, what he has to do? He has to check the debit side of the bank column with the credit side of the bank statement. This simple logic I explain you why. Okay. So now we'll compare what has happened. This 3,000 we deposited, has it been credited by the bank? Yes. We put a tick. We have to tick off this. This is how you do. But we have now accounting software packages. It's very easy to prepare the reconciliation. Okay. Now debtor has issued a check, gave us a check. We recorded in the bank column. Okay, and we went and deposited. Has it been realized in the bank account? No. Why? It takes time to clear the check. I explain you that. Okay, so this check has not been deposited, not realized. One difference. What is the difference? Okay, now you can see our balance should be 2,800, whereas the bank statement balance is how much?
2,500.
2,500. We found out one difference. What is the difference? We deposited check worth 600, but it has not been realized. Okay, the check has not realized yet. It has not got credited. Clear? One difference. Okay. Now the debit side of the bank column we compared with credit side of the bank statement. Now we will move on to the credit side of the bank column. We'll compare. We'll do the same process. What is that? We issued a check 500. Okay. Was it presented? Yes. Tick off. Then the second transaction, creditors. We issued a check worth 300. Has it been presented to the bank? We issued on 31st, but he has gone to the bank for this story purpose. Let's assume 1st February. So therefore it has not gone to the bank. Okay. There is another difference we found out. What is the difference? We issued a check but not presented to the bank. Is that clear? Okay. Now we identified the difference. We know as an accountant, we know. He knows what is the difference. Supposing if your finance manager or CFO comes and asks, bank statement shows 2,500, whereas your cash book shows 2,800. What is the difference? So what you can do? In that case, can you explain him? We deposited 600, okay, and we issued a check, not gone to the bank. Can you explain like that? No, there will be number of transactions. I took only 2 transactions, you know. So if there are 100 transactions, can you explain it like that? No, you can't do that. It's not practical. Okay. So what you need to do? You need to prepare a statement showing these 2 balances. You understand? And the differences. That statement is known as bank reconciliation statement. So we need to prepare a bank reconciliation statement. You understand? By showing the difference. Okay? Why our cash book balance is not matching with bank statement balance? Why it is not matching? Because of these 2 differences. Just prepare a statement. Okay. Now the second chapter, before we conclude, we'll prepare the bank reconciliation statement. So this is how you prepare the bank reconciliation statement. I'll show you. Okay. So I'll erase this part. I will erase this part. Okay. This is what very important. Okay. So what is this? We call it bank reconciliation statement as at 31st January 2020. Okay. So now we have to start from, okay, I will explain you later. let's start with our cash book balance. So we have to say bank balance as per cash book. How much?
2008.
Our bank balance. What should be our bank balance as per our cash book? How much? 2,800. Okay. So from this 2,800, we should arrive at this balance. What is this? Bank balance as per bank statement. Okay. So what is the end result? End result should be 2,500. From this balance, you should arrive at 2,500. What is this? Bank balance
As per statement.
as per bank statement. Very good. See, this is as per bank statement, this is as per cash book. Clear? What is the difference? 300. Can we show, okay, this is less by 300 like this? Can we show? No, it's not a reconciliation statement. Okay? You need to give evidence, supportings. Okay? So let's identify what are the evidence we have. We have two evidence. What are the evidence? Those are the differences which we identified by comparing these two. We compared bank statement and we compared the cash book, and we identified two differences. What is the first difference?
Debtor.
Yeah. So debtor, we got a cash from the debtors, we deposited. Okay. We went and deposited. But it didn't get realized. Why? Because there is a clearance process. Okay. So which means our cash book balance, the amount showing here, is more by 600, no? This balance includes this 600, no? Our cash book balance is more. Understand?
Yeah.
Cash book balance is, cash is more, no? By how much? 600. However, it did not get realized. Okay? So therefore it did not go to the bank. It did not get updated our bank account. So therefore the bank balance is less by 600, no? Is that clear? Our cash book we debited, but bank did not credit.
Yeah.
So our bank balance is more by 600. Their balance is less by 600. Clear? Okay. So less by 600. Okay. Since we are arriving from cash book balance to bank statement balance. Okay. So we have to take, well, what we have to do is we have to see what is the impact on the bank statement as a result of this. What is the impact on the bank statement? It's less. So less means you need to deduct 600. Is that clear? So what is that? Deposits, we call it, we deposited but not yet realized. Deposits not realized. So why we are deducting this 600? Because we need to arrive at the bank statement balance. Okay. So second part. What is second part? Second difference is we issued a check 300. We recorded in the bank column. However, the check was not presented by the supplier or the creditor to the bank, so that the bank did not issue any checks or cash. Okay. So our bank balance, by crediting, the bank balance is less by 300. You understand? By crediting, we reduced our bank balance. It is less. Our cash is less by 300. Has it been presented to the bank? No. Did they reduce our balance? No. So therefore they should have reduced our balance if this had been presented to the bank. But they did not do that. Therefore our bank balance is what? More by 300, no? Is that clear? So therefore what you have to do? You need to add. Clear? So what is this transaction? Check issued but not presented, no? This is how you have to write. These are very important. The reconciliation has to be prepared in this way. Okay? So basically we are adding this and we are deducting this. Okay? So what is the difference here? Net difference. 300 plus 600 minus. So minus, if you take the difference, the net,
Yeah.
how much?
300.
Minus 300.
Minus 300.
So minus 300. So 2800 minus 300 is 2500. Is that clear? Is that clear? Okay. So now the thing is, to do the bank reconciliation statement, okay, first of all what you have to do, you need to, we'll just recap the process. Okay, you need to compare the bank statement with the cash book. Then you compare the debit side of the bank column with the credit side of the bank statement. Credit side of the bank column of the cash book with the debit side of the bank statement. Then you identify the differences. Then we identify there are certain checks deposited, recorded in the bank as not being credited. Okay, that is one difference. And also we identify there are some checks issued but not yet presented to the bank. Okay, the bank has not reduced our balance. Okay, so these are the two differences. Now based on this we have to present the reconciliation statement to the management. Okay, so what we have to do, we took the bank as per cash book. How much? 2800. So cash book shows 2800 bank balance. Our bank statement shows 2500 bank statement balance. There is a difference of $300. Okay, so when you analyze this, we identify there are two differences. One is 600. Okay, this 600 is debited to the bank account, thereby our cash book balance is more by 600, whereas it has not gone to the bank statement, it has not gone to the bank, so therefore our bank balance is less by 600. So therefore we need to deduct this 600 to arrive at the bank statement balance. Clear? Okay. And this one, we issued a check for 300. The supplier or the creditor has not gone to the bank and presented the check. It's not yet presented. Okay. By crediting your bank account, bank balance, it reduces the bank balance. It is less by 300. However, the bank did not issue 300. It's more by 300. So therefore you need to add back that 300 to arrive at the bank statement balance from the cash book balance. So we adjusted, we added this and we deducted this. What is the difference? 300. So 2800 minus 300 is 2500. So this is the basic concept of how you prepare a bank reconciliation statement. Okay, I hope this is very clear to you. If you have any doubts, please clarify. Okay, so we need to discuss furthermore on this topic, reconciliation statement. So this is the basic story behind these two accountants. You understand? And there is a super easy way to identify whether this is plus or minus. That I will explain you. Okay, so just take down this, afterwards I will explain you.